Well, I guess that is the beginning of our show. Noah, how are you doing?
What
I'm
was that?
fantastic. Tim made it back just in time. Check
Tim
that
did
out.
make it back just in time. We're about to start without you.
Well, that's okay. First of all, when I logged back in, the audio was on some weird loop.
I
It
thought it was
was
pretty
it was
cool.
hearing it. Yeah, I just doubled the bass is what it was. No, it was hearing both me playing the intro and me watching YouTube play the intro. So
Yeah. Well, it
that
needs
little
more.
delay there.
I
Either
see.
way, it needs more cowbell.
Absolutely. Is that what they call breaking the fourth wall? Probably
Something
how
like that.
Elon Musk came up with his boring company idea too, as well. I don't know. Welcome out to our halftime report here, everybody. Guys, looks like we got people coming in. Halftime crew. We've got Coach Noah. Noah, how you doing today?
I'm fantastic. Thrilled to be here.
And Cody out in Hawaii. Cody, I am pining for some Hawaiian sunshine and some warmth. I
Come
would,
on.
man, I'll tell you, it's been snowing in Utah for like a month, and I'm tired of it. I need to get some warm weather coming back into my life. There's no doubt about it. Let's rock and roll here today, guys. Cash Flow Thursday, and we're going to be working on theta concepts. And one thing I wanted to do today is prep some covered calls. And we actually went and hand curated a few picks here from our Tackle 25. Cody, kind of explain to everybody out there, what is the Tackle 25? Start with that.
So Tackle 25 is something that you yourself and Matt put together, 3 or 4 years ago? And y'all have been doing it ever since. Basically, cover call being the beautiful strategy that it is, getting that nice 2 to 4% a month return on investment month after month. So what the Tackle 25 is it's a list of fundamentally sound companies that also have a nice yield for the covered call.
Yeah.
So based off of that, it's just a comprehensive list that starts at hundreds and hundreds, and it's just broken down to get those best 25 stocks that can help add that consistent yield every month.
Yeah. Noah, you're a trader who's been around the market for nearly 2 decades now. Now let that sink in for a minute when you say that.
Wow. That really dates myself.
Yeah, it sure does. But with that much experience and teaching as many students as you have, the cover call isn't always the sexy strategy that everybody wants to do. Some people prefer more advanced ones or more aggressive ones that can make more money. And I understand preferences. There's no doubt about it. But what do you like about the covered call for certain type of investors?
Well, one, I mean, it's very conservative in that regard. I mean, you get to own an asset, and you can typically pick quality assets that pay a dividend, for example, and then generate the cash flow either regularly, monthly, or you can use it strategically with timing. But I think it's a great because you can also take advantage of capital gains when depending on how you time the covered calls. But it's not as much leverage as things like naked puts. And, I think the only real drawback, Tim, is it's a little capital intensive. And I think the workaround for that is to find some of the lower price stocks that have good premiums.
Sure. Yeah. A lot of different advantages, things that I like. There are some drawbacks to it as well. And we're going to be working on it later in the show. Let's start with the S&P 500. Give me a thorough read on this technically, Noah. Trend, support, resistance. What are you seeing in this chart?
I am seeing 2,800, that big resistance zone out there. It's slowing the market down. We're seeing volume taper a little bit on the rise, and I think it's just a slowing momentum pattern. You've got a bit of a curvature to the prices rising out there. The way the prices are rising, it's getting a little bit of a rising wedge type pattern where things are slowing down. And which it makes sense since you've got that big $2,800 resistance zone out there, but it's still in an uptrend. It's still establishing new highs. You barely have one sell candle signal slowing down there at the top, if you're kind of looking at that. And I would expect a small pullback for a couple of days at a minimum, and then probably off to the races again. But it's just showing us some slowdown.
Which one trumps the technicals, the trend or the resistance?
Ooh, I'll get back to you after I see who wins.
Yeah, sure. Let's see who wins that fight right there.
Yeah.
Because obviously 2,800 is going to be a key psychological level. It's a barrier that we'd have to break through to maintain bullishness long term. That's a pretty obvious fact. For it to go up, it's got to break that level. But the trend is still pretty strong. We're above moving averages. We're strong here. I'm still maintaining a slightly bullish posture, but until we break out at 2,800, I'm moving into more conservative cash flow type strategies. One of the reasons why I like talking about covered calls today is I think this is the kind of market condition when you have low volatility that actually fits that system and that strategy.
Absolutely.
Yeah. There's quite a few things going on. One thing I saw, memorandums of operation or something like that, MOUs, I believe, out of the China-U.S. trade negotiations. They were making some headway and some progress there. Still a long way to go on that. Give me FXI if you would.
Memorandums of understanding, I believe is what it was.
Memorandums of understanding.
We're on the same page is what that is.
There you go. You got your FXI, China large caps.
Major large caps in China pressing up against resistance. If we get resolution out of that, there's a lot of potential in this space, in my opinion. I think they've been beaten up more than the U.S. stocks have. If you pull that back to a weekly chart, Noah, you'll notice that it's been down, down, down for much of the last year or so. In fact, a 5-year weekly. But we've got a W pattern developing. And if we can come out of that whole thing and get some clear air here, I would be interested in large cap Chinese tech, large cap Chinese companies. What's your read on this technically?
I like that. That's a very good looking double bottom pattern off of an old resistance point. It's slightly higher low, and then it's up right there ready to break that high, and it's getting above that 50-week moving average.
Mm-hmm.
So I think that's got some good upside potential. Taking it back into the daily time frame, it's got another high base type pattern, bull flag, and I think it's poised for a breakout. So if you get some favorable news out of those agreements and talks, I think that there's really good upside potential.
Yeah, some of the better performers here today on the S&P: Pacific Gas, Albemarle. I don't even know if I've traded that company ever. Norwegian Cruise Lines, Equifax, H&R Block. Let's take a quick look at PCG, if you would. They were obviously in the news for so much, and they're back up to $19 a share. They've got earnings coming up, and they don't have resolution on everything that's happened there with those fires and with their culpability or liability. What would have to happen for you to want or be interested in trading something here, Noah?
Oh, I would need to see normalization of the cycles and trends, like actually for it to start behaving like it used to look.
Mm-hmm.
Is it not normal for something to gap down every 3 to 6 months?
No.
Well, yeah, that's abnormal, just a little bit. But I'd like to see it start to get to establish normal price cycles like it had prior to all the drama.
Yeah, not quite there yet. I mean, even a day like today, it doesn't look like much. It's up 6%. We've got earnings coming in here. We have completely filled the gap, by the way. From January, that gap down into the 5, 6, 7 range. It's now come back up to the 20 mark and right pressing near there. Next gap fill would be at about 25, I believe. But I need more normal price action for sure. But that's a very radical, very volatile chart as well. Quick look at ALB. This one I've never traded. Albemarle, I guess. ALB, I've seen it many times, but I don't think I've traded this company. Earnings gap out into old resistance. Classic example of where a bear call could come in on something like this, Noah. Do you play post-earnings volatility?
Occasionally, if I get a gap and a setup for a run. This has got a high wave candlestick on it between what's it ranging between what's the R on that today. It's got a nice range between $1.85, 86 up to to 92. So that's a pretty good size range for it there. That I think makes it more difficult for me to want to trade any upside momentum. It makes me start looking at that as possible gap fill because it shot up and it's come back down so far. So that's a tougher one for me to want to pick off on a trade.
Yeah, it's interesting. I agree. It would be one that I would probably wait for some confirmation here, either on another candle, another pricing action, or on the intraday. HRB in the news as well. H&R Block, 3% up here, 74 cents, down in the $24 price range. Company just took out some interesting levels here on an intraday level, but now we're coming back up into resistance at 25. Earnings in a week here. That's not really tradable.
Yeah, I look at that. I don't have a pre-existing trend. Don't see a lot of clarity in patterns. plus earnings is coming. So this is one of those where I'd be like, yeah, I'm going to move on to something else.
Yeah. Moving on to the Dow, if you would, the YM contract. Let's break down the large caps. Across the Dow, one of the most interesting names is Microsoft. We'll look at that here in just a minute. Dow pressing 26,000 within shouting distance of the all-time high there as well. Definitely a V-shaped recovery, and I've called this one stronger than the S&P. Do you see anything discernibly different from this chart and the ES from a big picture perspective?
I think this has got better momentum up into that resistance zone. So 2,600, it's right there, but it's not showing the same kind of slowing momentum as the S&P is. So I think that's a sign of strength here. I think you'll see some pullback or consolidation at 2,600 here, but I won't be surprised if it powers through.
Yeah, it wouldn't surprise me at all either. As I look up and down the Dow, Microsoft grabs my eye. They're up 2% on a day where the market is flat. You know, the advanced decline line on the Dow is 12 up, 18 down. You're seeing some interesting strength across Microsoft, Coca-Cola, and McDonald's. The staples are moving, and a few of the communication stocks are moving. Microsoft here, nice dividend, pressing up against resistance. We were talking about this one last week in the scouting report meeting here, Noah, and it's almost a better position style trade than it is even a swing trader, kind of random volatility. What you read on the chart there?
Well, we looked at this one this morning in the traders lounge, and we actually set up to leg into a spread on that, trying to turn a swing into a position. It's I think you're right. It's got good upside potential. I think out of all the FANG stocks, it's showing the most life. The rest of them we were discussing are hanging out, not moving. The prices aren't moving on those FANG stocks. So this one's actually, I think, got some really good upside potential. You know, their earnings was reasonable. They do pay that dividend. I like it for a position, not a problem.
Some news out of the company today as well. They're introducing new products, and one of them is a Dynamics 365 product where they're talking about a new VR for smartphones, and obviously they're going to make headway there. People forget about the leadership in Microsoft, quite frankly. I think they get underlooked at. Their PE ratios, their valuation, their profitability, $800 billion company, 24 PE ratio. You bring in forward EPS numbers. I still think it's a good company. It's one of the better ones, in my opinion, in like you talked about. FANG, we're going to add the M to the FANG, no doubt about that. Looking good here today. And they also do pay a dividend. A lot of those large cap techs do not, but they do pay a dividend. That's nice as well. Across some of the other stocks on the Dow here, Coca-Cola, give me a quick peek at that chart. Such a stable, good long-term company with dividends. And if you are a conservative, ultimate conservative player, aren't you at least interested in this earnings correction on Coca-Cola to be able to pick up a dividend-paying company that you know has profitability? I mean, what's your read there? Yeah,
Coke's on sale.
Yeah,
you can buy the 12 packs. It's cheap. I like it. This is one of those things where you kind of come back, and Tim, you'll talk about, like, you know, people overestimate what they can do in the short term and they underestimate what they can do in the long term. You're talking about the company with #1 worldwide brand name recognition.
Yeah.
On a dip, pays a dividend similar to Microsoft's dividend, but the stock's half the price. So you got a healthier ROI on the dividend, and it's a decent covered call candidate. It's not, the premiums are never too rich on Coke, but they're consistently, it's consistent. You've got some premium in there, and it's not going to go out of business. I consider this a consumer staple that weathers any sort of recessionary pressures. It's a decent. I think it's a really strong blue chip company.
Yeah, pull back to a weekly chart if you would, talking about brand recognition, profitability, dividend, all those kind of things. This is not obviously going to be a top performer at the end of the year in terms of ROI percentage. But guys, look at the consistency of a company like that. You know, over year, they'll go through uptrends and downtrends. But whenever you get a better discounted price, they've tended to behave well. Now, could there be another $1 or $2 down? Of course, yeah, we see that as well. But that weekly shows us kind of the pattern of Coca-Cola.
Absolutely, it's got a good trend on it from that weekly perspective.
Okay, moving on to McDonald's, MCD, 1.4%. The staples are actually outperforming today. Daily chart
also pays a healthy dividend. I like the higher low on that, up above the moving averages with some momentum. It's a good looking chart.
We're seeing performance there. You're seeing, and I've got Wi-Fi skip here, Cody.
It does look like you have a Wi-Fi, Skip.
You got me okay?
I'm hearing you now. I
got
wasn't
it.
for a second.
Bring up Comcast if you would. Let's take a look at this company. I'm going to short and call CMCSA.
Yeah. So I just upgraded my Comcast trying to get faster speeds, and it downgraded my uploads. And so it's going to cause me problems. I'm a little bothered by it.
I was asking my wife about this the other day, and Halftime Crew, maybe you can help give me some clarity. Does everybody else have as many issues with Wi-Fi as I do, but I just tend to complain about it more? Like, is it very common for you guys to have your Wi-Fi go out like once a day?
That seems uncommon.
Well, let me ask this, Tim. Why not just move your modem into your office and hardwire it in?
I'm hardwired in.
Oh.
I've got a hardline Cat 6 line directly to the modem, hardwired in.
Hardwired, but is your machine hardwired to the modem?
Just short Comcast. Forget about it.
Well, short Comcast, and I'm going to go ahead and blame your magnetic personality for interfering with that Wi-Fi signal.
Look at that one.
Yeah.
Singer.
Other companies up here today, Verizon, Intel, down on the Dow DuPont, DWDP. When industrials start to fade, that gives me a little bit of concern. Obviously neutral here in a long-term range. They pay a dividend coming up. They had a nice little developing pattern here. That candle, no, those two candle relationships back to back, beautiful up day, red back down. How do you read that?
That creates kind of a little tweezer top type action on the shadows. If you look at those shadows, those came in real close. That's a slowdown intraday and a pullback. You've got an upward trend, but you're getting a nice pullback, a deeper pullback. So if you were to drop that intraday, there you go, popped up, hit that double top, and it's been selling off most of the day. So you're seeing a deeper pullback in what's otherwise been a pretty solid uptrend. Yeah.
Chevron down as well, Nike, Goldman Sachs, and United Technologies. The Dow Jones, though, holding relatively fine. I mean, it's down 0.26%, 66 points on the day. Intraday and also pre-market, it was trying to press and break that 26,000 mark. Could not do it. We got more resistance up in front of us. Move on to the NASDAQ, if you would, NQ contract. And let's take a peek here.
This one is hovering around that 200 period moving average, around that 70, 80 ballpark with the known resistance. So that's kind of a double technical whammy, if you will.
Mm-hmm.
And I think it'll power through, but it's slowing down right into that moving average. And I think once it pops up, you'll see a little bit of energy in that. But otherwise, that's a big technical barrier that it might be enough to push it back down a bit.
Matt's not here, so I'm going to ask you, okay? Technicians, is the candle from 10 bars ago a pivot?
10. Let me count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 9 right here?
Mm-hmm.
Yeah, that's a pivot.
2 red candles, green candle with lower tail in an uptrend. That's got to be a pivot, right?
Yeah, the minimum definition of a pivot is 1 candle to the left and 1 candle to the right. It's just not a very big pivot, and most people consider it noise. But this is what they would call a P2, 2 candles to the left and at least 2 to the right. So that's a little bit more visible. I definitely think it's a pivot.
So then you've got support here at 68.20, which is going to be minor short-term support. But if it violated that, you'd have to be moving into a neutral posture, right?
Well, yeah. I mean, if it violated that would also be violating that 20 period moving average. And so you'd get 2 technical signals. And I think you'd be in a shorter term correction on that. So yeah, that first level of support, I think is one of the first things I look for trend reversal.
Now on the resistance point, and we always know, and we talk about it all the time, resistance is a zone. When I see old history here from October and November at 3 different locations, which one do you put most importance into?
Well, if they line up, if you're looking back at that 7,080 ballpark, coupled with the moving average, that one definitely gets its own little ranking. I look for commonalities. If you got 3 different ones, I'd bring in more history and look for, do you also have like old support resistance? Like here's this 72.16. It's old resistance from November, but you go back a year, it's support back in August of the previous year. So that's a double technical whammy. And I see a very similar scenario here with the 7,345. So they all matter. Right now, you're just dealing with the one happens to have the 200 period moving average with it as well.
Mm-hmm. Interesting. One of the Dow components, and also that we talked about, bring up JP Morgan if you would. I saw a news headline hit a few days ago, obviously, of them creating their own cryptocurrency. And then they came out and they talked about how the slowing EPS growth, they actually see a very bullish economy.
Let me get this straight. Jamie Dimon says that cryptocurrencies are a cancer or something like that. Like he uses really strong words to poo-poo them.
Yeah.
And then they go ahead and work on creating their own. I see what they're doing there. Okay.
Yeah. And they also came out and changed their economic outlook. One of their chief economic strategists says that they think that the economy is going to grow faster than they had expected even 3 months ago. And a lot of that has to be the PAL put and also them just backing off interest rate expectations.
I think so.
Is the economy got a chance here to improve better than expected? We get resolution out of these trade deals and we can break out of these resistance zones, Noah.
So much winning, Tim. So much winning. I know.
Bye. Right?
It needs a hashtag. Yeah. Well, I mean, you think about it. It's a combination of all of the things. It's the PAL put. It's the deregulation. It's the unemployment. It's all of those things combined. And so I think that the fears of slowdown with the Feds pulling back off the interest rate hikes, I think the market's going to grow.
Stock that just hit the news wire literally 10 minutes ago is Johnson & Johnson. They're under more investigation. J&J, bring that one up real quick.
More talcum powder problems?
I guess. I mean, they're down, just 1% here. It's not like it was a bit ago, but they're also under some potential lawsuits over this or in further probes by the Justice Department, it looks like.
They're being sued all the time.
Yeah. Cody, is talcum powder safe?
Yes.
Yeah.
When used as directed.
Thank you for the disclaimer there, Noah.
Oh, Cody. Yeah. Cody is by the way, a chemist, I believe, right, Cody?
Toxicologist, but yes, chemistry is a part of that.
I see. C'est la vie.
So yeah, toxicology, I actually study the things that can kill you.
Mm-hmm. Couple of companies that are grabbing my eye on the NASDAQ as well. Biogen down 3%, C-Trip down 3%, BIIB, if you would here, Noah. When healthcare and biotech are down and staples are up, it's a day of rotation, in my opinion. You're moving out of aggression into some more stability. And that makes sense when you think about us being at resistance. Obviously, it's not like a major market sell-off. On every major index, we have an advanced decline line near the 50-50 mark, just barely underneath the 50-50 mark. When you see biotech and energy and some of the more aggressive stocks down, and the biggest gainers are things like Microsoft and McDonald's and Coca-Cola, Noah, sector rotation 101.
Yeah, we were talking about that this morning in the Traders Lounge. We were inspired a little bit by a question, but also the daily email that was talking about that sector rotation. And healthcare is one of the biotech is more aggressive than other healthcare stocks. And so when you see money coming out, I usually consider that institutions rotating, just like you're saying. So absolutely.
Yeah. $DXY, move on to currencies. Actually, no, RTY, real quick peek at that one. I always keep missing the small caps here last second, /RTY.
Oh yeah, /RTY dollar. We'll get there. I think the momentum here is fantastic. It's right up into the resistance with the 200-period moving average. But unlike the NASDAQ, this has got a lot of momentum going into that. Mm-hmm. So I'd expect that one to have a pretty easy time of breaking through. We were discussing hedging those condors. I'm sure everybody who attended the condors webinar last night with Tyler was talking about that. I think there's a lot of energy in the small caps.
I agree, actually. And I think the small caps, if the market does continue to stay bullish, have the best opportunity to break and run. There's tons of clear air up there. We're nowhere near the all-time high here, where every other major index we just looked at is near the all-time high. The NASDAQ, I know it's sitting on the 200, but we're within shouting distance of the all-time high. The rut has 150 points up before we press that, right? And so that 8-9% more room and movement, if you can break through 1600, and that's a big if, and you're on the 200-period moving average, and it easily could just pull back into a new pivot. But there is tons of clear air up there. I would give everybody the same direction. Apply your rules. Make sure you are playing it safe. If you're in some kind of bear call neutral spread, make sure that you got a plan on how to hedge that and correct it if needed. The rut is great. The RTY has been showing a lot of leadership, but it was the biggest sell-off too. Volatility is higher. No, why is volatility in smaller companies bigger than big companies? Simple question.
Smaller boats, I think, get tossed around by the waves a little bit more. The policy changes affect those companies. They don't have the same kind of staying power as those big multinational corporations. So I think they're just more affected by the trade winds, so to speak.
Now let's move on to the commodity and currency market. Start with $DXY, and we'll talk about the dollar index. Oh, Cody, you see some setups in the Forex market, don't you? I know you and I were talking about
that. I do. I like two different pairs right now. I like the euro dollar cross pair and the Swiss franc cross pair. Both of those, they look just like this does. You can see how it just pulled right back, hitting those two moving averages on that chart. And we get a trigger up above it. Hopefully we can get it Monday and it'll just pause for the next 2 days, because I really do get irritated when things in the Forex market decide to trigger on Fridays before the weekend.
Yeah, Friday going into the weekend is not necessarily the way you want to play it. Tomorrow, we do have a retail sales number that could be a part for the Canadian dollar. And then President Draghi does speak. So testimony out of the euro might make me push towards one of the other cross pairs, possibly. Draghi talking about monetary policy is like Powell talking about.
Is that how you pronounce that? I always thought it was Draghi. That just sounded.
I don't know. Apparently I was pronouncing Lululemon wrong. My students and my wife corrected me last night.
What is it? Lululemon?
No, I was saying it like that. That's not how you say it. I think you're supposed to say Lululemon. And I've always pronounced Schlumberger wrong.
Schlumberger is my favorite. Schlumberger. It's like Target.
That's right. That's right. But we have our own lingo as traders. We also spell
Home Depot.
Wrong. Yeah, Home Depot.
Home Depot. Just like that.
That's funny. $DXY on a W pattern kiss hello, old pivot point, new pivot point here. Noah, I know it's not broken out of the 97.5 handle, and I know this is a big index heavily weighted against the euro. Is that a tradable pivot point?
I'll tell you that my Pavlovian responses have been going off on that pattern since we opened the chart. I think you've got a really nice old resistance support zone. You got two moving averages. You got a doji. You got a confirmation. You got enough room to make some money to resistance. This is the kind of cup and handle type setup that's forming that I like to get into. I like to leg into early.
Now, if the dollar runs, that might bring a pullback in the commodity market. Let's start with crude oil. Crude light actually now hitting its head. I was going through the chart on this morning, and I need some help identifying exactly where the resistance zones are. CL, if you would here, Noah.
You bet.
Bring that one up.
I did not win the fastest fingers competition this morning, but yes, there you go.
No, c'est la vie. I like it when we're methodical and we're working through the markets one step at a time. There's a 4-candle consolidation that was a bearish retracement in November, and that's clearly a pivot point, and it's clearly potential resistance here. How strong is it? And if you're looking at that as a trader, Noah, you see it, first of all, I'm sure.
Yeah. I think there's some surprising strength here, more than I expected. Seasonally, I'm always looking for energy in the springtime, but I've had my doubts this year just because of those inventories. And you're seeing a lot of production. You know, there's talk of pulling back on production and the pump's slowing down, so that might lend itself to some more price rises. But I think it's the real deal.
You know, I'm looking at oil and I'm looking at a V-shaped recovery and then a breakout. Now we're at resistance. Is it overextended to where you'd want to wait for a little pullback here, maybe play it next week, or would you play momentum if it broke here?
I'd like to see the pullback personally. If it does break, I have a little harder time wanting to do that when I think it's shorter term range up. Doesn't mean it can't go higher. Just means I don't necessarily want to go trade it that way.
Crude down 0.5%, Brent down only 0.33%. Actually, gasoline and heating oil are up today. So you're seeing some mixed action out of energy, which is not always common. Another product that's actually up today is natural gas /NG, if you would bring that one up real quick. W pattern on the bottom. I'm not taking the bait here. I see a very, very complex chart with all kinds of noise here. Help us interpret this one, if you would.
Well, I like the old lows. If you back it out and look at the big weekly time frame, you can see that 250 level is a big zone. So I like that part of it. But just like you, Tim, I look at all the chaos that occurred right before that. And yeah, it's a little double bottom at the right price zone, but I don't have a lot of confidence in it because of all that downward momentum that came into it.
I like to have simple choices, right? I like clarity. I like when a chart is just very obvious about where I should and shouldn't play. There's already enough unpredictability in the market, even when you get a perfect entry point. Why add noise to it? I mean, there's obviously ways you can play this. You could play it bidirectionally. There's all kinds of volatility strategies. You could get advanced and go into something like that. Of course, markets are complex, but I like simplicity. I like gold, for example. Gold the last 3 or 4 months, when it's been trending, has been very, very clear. Higher high, higher low, momentum picking up. When it pulls back, that doesn't mean it runs every day, Noah, but that pattern's a lot easier to read, right?
Oh yeah, much, much greater. I love clarity of trend. I like when I can see easy cycles. I kind of look at that as the personality of the stock. And I like stocks with really good, strong trending personalities with clear cycles.
Mm-hmm. Now, as that is now selling though, some profit taking, how do you approach this as a trader, maybe that missed the first gold moves, or you're watching this and you've been hearing everybody on the halftime reports and all the shows and the reports, they're talking about how they were long gold or gold products and you've been waiting. Now, what do you do with this?
Well, I think you're waiting for a pullback, and I think you want to wait for it to come back down to the bottom of the channel, closer to that 20-period moving average. Wait for the prices to slow down and give you confirmations back up. That it seems to have hit a pretty solid resistance zone out there at 1350-ish. Mm-hmm. And I do notice this, Tim. This is something that the steepness of this current sell-off. This is again halfway through the day. And the volume, we're seeing a bit of an uptick on the volume on that sell-off compared to the previous sell-off, which was pretty gradual, and the volume dipped on that. I would like to see the dust settle on that, and I'm going to watch for buy setups around 1320-ish.
Mm-hmm. But as we see with pivot points on gold, I mean, it can be anywhere between 1320, within plus or minus 10 points of that. And as it's settling in, it will show us more of that range. Obviously, you don't want to catch a falling knife here, down 1.3%. That's just weakness on a day-by-day basis and selling on the intraday as well. So we're going to wait for a better setup. But I'm with you.
I think it's just profit taking and a lot of it just because of the location up near that old resistance. Mm-hmm. I'd like to see the volume dipping as it drops. So as if it continues to drop, watch the volume taper off, watch the candle shrink. It should be a good buy setup, I think.
Sure. Across the market, interesting action, profit taking in some areas, trends are extending in others, but really it just feels like the market is hesitating at resistance on a lack of catalyst. And that makes sense. So am I, by the way. Markets are a reflection of all the sentiment of all the investors and all the traders out there. I don't think anybody's aggressively wanting to push money into the middle saying, hey, I'm confident that it's going to break out and run. So everybody's taking a little bit of a step back and posture is reducing just a hair. Makes sense to me. On our Tackle 25, couple of stocks of note that are moving here today that I like. Microsoft, we talked about. Toll Brothers has earnings. Delta Airlines up 1%. DAL, if you would.
Good old Delta.
If crude settles in, the airlines could have some potential here. That's a reversal pattern, Noah. I don't mind that. I don't know if I love it, but I don't mind that. What's your read?
Well, I always look at that and I want to see what the rest of the airlines are doing. It's up above your two shorter term moving averages, your 20 and your 50, and you're looking like those are going to cross. There's a lot of overhead congestion. I mean, a lot of old price action over there, big 200 period moving average. So yeah, it's a reversal pattern, but we might be able to find airlines with more strength.
Yeah. There are some other companies that are grabbing my eye on the Tackle 25. Applied Materials next, if you would. That's a beautiful test. Now, it's came back from hitting its head on the 200. Now we're in a little bit of a moving average pinch there, like Coach Mark talks about. Support is holding for now. How would you read this one?
Well, like you said, it bounced down off of that 200, that falling 200 period moving average. It's catching the rising 20 and a support zone, and it's got some smaller candles here. Post earnings, I think that this has got a good chance of rising back up and retesting that resistance in the 200.
A company that just flashed my alert sign is Tesla. Bring up Tesla if you would.
All right.
We don't talk Tesla as much as we used to, but maybe we should. Broke below 300 here today, Noah. That was something I've been watching for post earnings in a fading trend here, potentially moving into a bearish position. What's your read?
Wow, that is my read. You described it so well. That's exactly what I'm seeing here. Exactly. It's 300 is a big number. There's a little bit of support below it. That's that little red line I've got drawn there is kind of identifying the 296 zone that I've seen in the past. But 300 is the big number. So it's breaking down a small uptick in the volume on this downward pressure. I wouldn't be surprised to see it retesting those 280 lows pretty soon.
Yeah. Does Tesla have a strong enough brand and brand recognition to where they can stave off competitors who are going to come into their space?
I know that I just read a report on their customer satisfaction being quite high. Mm-hmm. I think they do have a strong name brand recognition, and I think I still want one. So
yeah. Halftime crew. Do you own Tesla? Do you own a Tesla? What is your opinion of this brand? Is it something that you think is bullish long-term, neutral, pass, or bearish? I know it's a very hotly opinionated and debated topic with Tesla. They talk about the fanboys. By the way, one of the most shorted companies in the market and one of the most, cult-like companies in the market. The people who believe in them the whole way, and the people who do not are betting against them big, which is why you see such volatility between 260 and 380 over the last 2 years. It's been crazy volatile, back and forth, and cannot break that long-term range. Back that out to a weekly chart, if you would, Noah. This is a debt-driven company that's still a negative PE ratio.
Well, I did see another funny report. Like somebody gave their bull case for Tesla and they had it at like 700, and their bear case was at 400. So their bearish case had the stock price still rising. I think that's a big support neighborhood between, call it 275 and 300. Mm-hmm. Maybe even as low as 250. That's going to be, you still have rising prices on the weekly. You still have a rising 200-week moving average. I always wonder about the debt-driven companies, but they do seem to innovate. And, it's one of those that I think kind of plays out quarter to quarter. Otherwise, it's a little schizophrenic.
Another Tackle 25 stock that's grabbing my eye here, Newmont Mining, moving on to the next one here, NEM. I really like this company. Always have. The weekly chart starting to show me a little W style pattern, breaking out of that little pivot. Daily chart showing the same kind of thing. They pay a dividend, and they're clearing out into new levels and actually post earnings. Give me a read.
Just that. I like the post earnings breakout, got up above the 200 period moving average. High wave candle today, which is those long shadows, small body. And that shows some short-term selling pressures. It came out and kind of hit old sport resistance numbers in that $36 zone. Mm-hmm. But I would expect it to stay up above that new 34 price threshold. As it's popped up to new high, any test, that lower shadow might be your retest already. Mm-hmm. I wouldn't be surprised to see it come back down and retest the zone a little bit more officially before taking off. But hey, I like it. I've always liked this company too. I think it's got a decent little trading personality.
Jack in the Box, flashing my news wire as well. JACK, if you would. I can't remember. One? Jack, JACK.
Jack.
Not exactly my go-to fast food place of note, but I do know it's very popular among those who do like it. The company's up 5% here today on mixed results, but the stock was running in the morning. Now it's come back into a range, completely flat here. Could be something like a post-earnings condor candidate, Noah.
Yeah, it's got a lot of sideways consolidation there, and so I don't really see these as directional as much as you could do credit spreads or condors types of strategies on them. Yeah.
We mentioned the large cap Chinese tech earlier in the show. Bring up Baidu if you would. They have earnings today. BIDU.
BIDU.
This is going to be a big dog. Baba and Baidu are the two big ones, obviously, over there in China that are publicly traded and part of those indexes. I know they've got other ones that play a major role as well, but this is one of the big ones. Coming into earnings, long-term downtrend, short-term compression, sitting on a rising moving average, but who the heck knows? We got to see a post-earnings move from here. If you get a gap to the high side and they come out and they blow the doors out, that's got to go on a watch list at a minimum, right?
No, I think so, especially after coming off of a bottom like that, gapping to the upside. And I do think it'll be obviously strongly influenced by, what's going on in China, but overall, that earnings is interesting. I think that's probably the one to watch this week.
Well, there's a couple others I want everybody to keep an eye on and put these on a watch list, guys, and see how they react to the earnings and start to work through. Dropbox, I'm a huge believer in long-term of this company. DBX, I know they're an IPO last year. They've had volatility. Finally hit the 200 period moving average coming into the chart. That's always a good sign that the IPO has been around for enough time here. Now we're moving into earnings, Noah, a V-shaped recovery. I saw Spotify do this very similar kind of thing. After they got out of earnings, Spotify ran 10%, So Dropbox tonight, is this a company that you've kept an eye on, Noah?
Yeah, I have kept an eye on it. And this is actually a really good example of what I see as the IPO pattern. The IPO usually comes out, prices run on speculation, sell-off happens, it goes down, it stabilizes, and then starts to recover. So this is really following that general IPO pattern to a T, and it's usually after it finds that bottom that I'm most interested in getting into it. Mm-hmm. So I like it. Yeah.
Another company that I'm really high on long-term is Roku.
Oh, I thought you were going to say Cron. I was really high on. Wait, it's Roku.
That's funny.
I don't understand this company. I don't really get how Roku works.
Cody, you need a young person.
All right. Roku is an additive device that you can plug into your TV, and it makes it a smart TV. It gives it access to Amazon Prime, Netflix, Hulu, Vudu, I think is a newer one. They also have access to different stations for free. Like I think you can get ABC News for free, a couple other ones like that, CNBC, as well as they've started releasing their own like originals, kind of like Netflix or channels that you can watch. So it's an all-inclusive, hey, plug this into your old boring TV and it becomes a smart TV, Wi-Fi capable and everything else.
Well, there you go. I like the pattern. Nice little setup for a pullback. Needs to probably come a little deeper, but lots of nice momentum. And then that earnings report coming out.
I love it. And that kind of runs through all the ones that I've got an eye on right now. We're going to move into our theta section here. And Cody, young man, I want you to come on in here for a minute. I was talking to a trader this morning, Noah, and she has been back testing and practicing and working on covered calls for 3 months, and she's done enough paper and practice trading where she's like, Tim, I want to jump into the live market, but I'm nervous. And I said, well, I mean, it's got to be your choice. It's your money. And after all, you're the trader, you're the investor. But if you want to try something that might be a little less nerve-wracking, maybe a covered call on one of these more affordable companies. Sometimes the covered call, and you nailed it right on the head earlier, can be intimidating. To buy Boeing, you need 40 grand, right? It's $400 stock. But to buy some of these other companies like an AMAT, $30 stock, E-Trade, $50 stock, AMD, $20 stock, they might be more approachable. And so what we did as coaches here in the pre-show is we handpicked these 5 stocks, okay? And Cody, explain why we picked these.
We picked them based off of we went to tackle 25, so we already know that these are fundamentally good companies. And then we looked at what their pattern is now, whether they have earnings coming up. Just if we were looking to enter these trades today and start building cover calls today, we just said, okay, do we like the pattern right now? And went from there.
Mm-hmm. Now, this spreadsheet is called the Tackle Theta Research Spreadsheet. It's an evolution of teaching people for 14 years here with the other mentors and coaches. And one thing I do whenever I work with people one-on-one is you want to put them in a position to succeed by giving them structure and discipline. And so what we do is we fill these data points out one at a time. If you've never downloaded this spreadsheet.
Really quick, Tim. Yeah. Actually, I think you were about to get to it. I was just going to say, every time we use the spreadsheet on YouTube, we always get comments asking, where do I download? The way you download is go over to Tackle 25. You sign up for pro membership. You get this spreadsheet and others for free.
Yeah, and it's a fantastic tool, by the way. And then you can download it directly to your system, and it has all of the different metrics. By the way, Cody, if you'll scroll down, it also has some rule designs on how we trade covered calls. So in the notations, every time there's rules on how to play the covered calls, all those different details and whatnot. We're not going to go through that today. That's a course, right? And we're here in the halftime report. What I want to highlight is maybe build one or two of these, with the time we have here. Let's see what we can get through. And let's kind of kill two birds with one stone. Let's have Noah, you and I, let's look up data as we go. And Coda, you plug it in the spreadsheet, okay?
All right. Yeah. Let's start with Newmont. Actually, why don't we switch off? Tim, you take Newmont. Noah, take AMAT. And just call them off.
Now, you've got Nucor there. I think we meant Newmont, N-E-M, not N-U-E.
Oh, excuse me.
I also dig on Nucor. It's a pretty cool company.
I do like that steel company as well, for sure. Okay, so I'm taking Newmont.
Yep.
All right. So your price is $35.60. We're going to do the March 29 DTE. We're going to sell the 36.5 strike at a 0.37 delta. Credit is 0.62.
All right, Noah, what do you got?
All right.
Tim, go ahead and look up E-Trade.
AMAT, we'll use the same March 29 days till expiration.
All right, what's the price right now of AMAT?
Price right now is 30. Last traded price is 38.53.
38.53. Okay.
Okay. What was our delta rule here? We're looking for a delta of 30, 40.
Closest to 40.
We've got a 39 delta for the 40 strike price.
What kind of credit do we get on that?
That is going to give you about 88 cents.
That one doesn't sound too bad at all. E-Trade, go ahead and look up AMD there, Noah.
48.13 price. March 29 DTE. These all have weeklies. There's a reason why they're on our watch list. Call sold would be 49. Delta 0.41. Your credit here, we're looking at about 95 cents.
Wow. And last one to look up for you, Tim, is Cron. Noah, what do you got for AMD?
AMD last traded price is 24.25. We've got a 44 delta with a $1.03 at the mark.
Mm-hmm.
$1.03, and what was the strike on that one?
That is the $25 strike.
All right, and finally, Cron.
22.84. Okay, 39-day tell option in the March, or 29-day, excuse me. Same March options.
I was say 39-day cannot be March.
It's not going to happen there. The call sold, we're going to do the 25 strike at a 38 delta, and the credit looks to be about 118.
All righty.
Okay. Now, Cody, thoroughly and kind of step by step, just explain the columns and what each of those things are. Because sometimes as coaches and veteran traders, we can fly through stuff. And like DTE, I'm sure there's a student out there or a trader who's new and like, I don't know what that is. So walk us through the columns first.
So price, this right now, the price column is the current price of the stock. So to do a covered call, we have to buy 100 shares of the stock. So on a margin account, it's going to be half that, but you're still going to pay that amount. So this is the price of the stock that you need to purchase 100 shares of. Now, the month March, that's saying that we're looking to sell the call in the month of March. That happens to be 29 days out. So 29 days till expiration is what DTE is. The call sold is the price above the current price that we're selling that call to receive the credit. Now, the credit we're receiving is here, and that's per share. So we're getting 62 cents per share for Newmont. And since we have 100 shares, we're getting 62 bucks. So we're doing that at a closest to 0.4 delta rule. That is the rule that we've designed. We've done that for a reason. For today's show, I'm just going to say follow the rule close to 40. Don't ask why.
That's right. Follow the rules when you're new. Follow the rules when you're a veteran, by the way. Noah, the easiest thing in the world would be to just have some software tell us what to do, but that's not necessarily the result here, right?
Yeah.
The obvious eyes are going to go to the green boxes.
Well, it's amazing how that works.
Isn't it? Right? It's psychology, it's just instant instinct. We're going to look at this 4.4% and the 5.3%. They're shiny. They're showing as green and we're like, go. But that doesn't necessarily mean that AMD and Cron are the best trades here. How do you start to break down and evaluate, not just in this example, but any example, when you got 5 candidates and you might only trade one of them, how would you start to make choices?
Well, I do like to start out with that ROI premise. Comes back to the stock's personality for me, availability of other options. I could factor in things like what would it cost me to buy protection on it if I needed to. Do they have earnings announcements, things to worry about? Volatility cycle is something I also pay attention to when I'm looking to place covered calls. I'd like to try to catch stuff on higher volatility where possible. Mm-hmm. So I might look at, who's recently had earnings, where their volatility hasn't completely dropped out or they're closer to earnings and I still have some time to cash flow.
For sure. I'm looking at these ROIs and obviously those last two do pop 4.2, 5.2%, but they're higher volatility companies in terms of their implied volatility and their ATR relative to price, the actual historical volatility.
There's a reason these two are on the Dirty Sexy Money list and not the Tackle 25 list.
So I can
tell you from selling calls on both that these take more management, more experience, more time to deal with.
Yep.
So depending on what strategy you're looking at, if you have the time and you know how to manage, you've done a few of these before, awesome. Yeah, go for these. This is your first cover call. I would not recommend either of those.
In the chat, just so that I have the numbers when we go to Cody's chart, somebody type in NEM 1.8%, AMAT 2.4%, ETFC 2.0%, AMD 4.4%, and Cron 5.3%. So that's our standard credit ROI. That's the credit amount converted to a 30-day number and then relative to the price and the credit that you're getting. ROID is a different discussion. We'll leave it for another time, maybe on a Friday fun day or something like that. Now let's go to the charts one at a time and let's kind of analyze these. For me, Noah, you're right. The discussion does start with ROI. We're here to make money. That's what a trader's job is. A trader's job is to make money. Cody, what's your job?
Make money.
That's right.
Make money.
Okay? We're here to make money. So when we go through these, we've got to think about which one can give us the potential for profitability. NEM was what percentage ROI did we have on this one here?
For
the 1.8.
I think this one was a 1.8.
ROI.
Yep. Thank you, Coach Emily. So NEM at 1.8%. Does this check off the boxes you need to justify and want to do a covered call position here? Start with Cody and then Noah.
Yes, but I would sell a cover call on this one had I owned Newmont before this move.
Mm-hmm.
So, and the reason I say that is, and management technique of a cover call is you sell at the top of a pattern movement. So this retracement move here, this would actually be a perfect time to sell the call out. Now, wouldn't necessarily want to be purchasing right now to sell out. So it depends. But as far as just getting into it right now, no, it doesn't meet my criteria.
Noah, does it check your boxes here to be 1.8% ROI at the top of the range?
I'm with Cody on that. I'd rather catch it off of a better technical setup. So yeah, that little sell signal, probably, if it's not a bad time to sell a call, but I'd hesitate to buy the stock.
That's right. Okay, AMAT.
Actually, like out of all of these, I think this might be the best one for the beginners.
2.4% here on a pullback, not a breakout.
Yeah. See, I like the technical setup here. I have much more confidence buying this post earnings. There's still going to be some premium, even though the volatility crushes after earnings, it just barely happens. So there's still some lingering premium in there. Mm-hmm. And I actually like this. I think this is, got the kind of checks all the boxes for what a decent covered call would look like.
Cody, what's your read?
I see about the same. I like the pattern that we're seeing on the chart here, where it's got this, where it's come down. Now you can tell that now it's in a high base. We're looking to turn around. This thing looks like it's going to turn over and start heading to the upside. I absolutely love this idea of buying now, selling out. What was the strike price that we sold on this one?
$40 strike.
40 exactly.
Mm-hmm.
So $40 strike, which is right there at that resistance line. Yeah, I wouldn't mind buying it right now and selling even the 40. I like this one.
Getting paid $1 to sell it at 40, that's the same as selling at 41. That's resistance. So, hey, buy low, sell high. Boom.
I like it. It's a good setup as well. I agree. E-Trade, 2%. Now we're a little bit lower than AMAT. We're in a neutral range, and neutral or bullish are both fine. Got a little W pattern. You've got moving averages pinching here. If it was a clear bullish technical signal, we might just buy the stock, right? There's a reason why we're talking covered call as the market is hitting resistance. So 2% here. Cody, your take first.
My take is I like this one. So just like you were saying, great example. If we had a more clear bullish signal, we would just buy the stock or, buy a call or look to do a bullish strategy on this. But since it's in a neutral pattern, but it's showing signs of wanting to reverse, wanting to possibly break to the upside, then this is a good candidate, in my opinion, to buy now, sell out. And if it moves up there, we collect both the premium from the call sold and the movement on the stock, which is on that chart. Actually, let me go back to the chart real quick. On the theta spreadsheet, that's your max profit that you're seeing. That's when you get the movement of the stock and the credit with coupled with one another. So I do like this setup.
Now that you look at the max ROI, though, AMAT has 6.1% potential max ROI if it does run up and hits resistance. There's some debates in here. I mean, there's never going to be a perfectly clear choice. If you don't see the subtleties when you're breaking down different candidates, you're probably not reading them with a fair and open mind. There's always a trade-off in the market. Part of our job as traders and investors is to evaluate enough information to where we understand the trade-offs and then we choose based on our strategy and our purpose. AMAT's got a little bit better ROI potential. Chart's a little bit different. E-Trade's probably a little bit more stable here. Dirty, sexy money candidates are a completely different animal. Go look at AMD and Cron real quick, 4.4 and 5.2.
Before we do that, Noah, what's your thought on E-Trade here?
I like it. I think it's a good looking setup. Checks a lot of the boxes. So it's also not a crazy mover like some of the dirty, sexy monies. Mm-hmm. So I think it's a great place to cut your teeth on covered calls.
Mm-hmm.
Cut your teeth. I like it.
AMD.
All right. As you can tell, this if AMD wants to move, it will move. That's the easiest way to put it with AMD.
Yeah.
And right now, with it having this kind of pullback, moving with resistance right above it, I like it. It's cheap. It can move. It's just going to take management. The chart's not as pretty of a signal, but that comes with the volatility and management needed for the stock. I still cover calls on AMD.
Noah?
I have no problem with AMD. I don't think it's that dirty. It's certainly sexy, but I don't know if it's that dirty. It's not cron dirty, that's for sure.
I saw some number the other day. Their EPS growth has been off the charts. I mean, obviously they've had an incredible 2018. They had the volatility when the market crashed. They crashed too. Obviously, they came back, but they held that 200. It was on the stock and options report this last weekend. Pullback, pivot, upward drift. Yeah,
I like it. I think it's actually a pretty decent candidate. It's got good premium in it. And then the other thing I like about it, Tim, is the whole semiconductor sector looks about the same.
Yeah. Yeah.
Quick question in the chat, Nicholas. I just wanted to answer that real quick. You could do that. I wouldn't necessarily do it tomorrow if you wanted to sell a put. That's also known as the boomerang trade, where to cash flow off something you don't own yet, but you're willing to own, you sell puts against it until you get filled, and now you sell calls against it.
Let me answer that more directly, Nicholas. If you haven't back tested how to do something and proven that it works, you don't do it. Okay. So
it is possible to do, but yes.
Okay.
But
right.
I do like the idea of getting paid to buy.
I do love that. But I don't, and I love the creativity. And I know Nicholas, he's very active, team tackle. Nick, don't take that the wrong way. But if you don't know that something is a part of your system and vetted and proven, you don't do it, period. That's the way we have to approach trading. Last one, Prawn.
Blake, that's just funny. AMD's sexy. What are you doing after work?
What's your sign? What's your symbol?
I'm probably gonna tweet that one out later, Blake. Give you credit for that one. That one's funny.
Well, it is advanced micro devices, so we could go down a rabbit hole here if we wanted to. But
oh, we could.
So advanced.
All right.
Oh, with that, we're gonna move on to pot.
Yeah. What is your read here? Because obviously it's got the highest ROI, but it's got the highest risk. Markets are smart. The more money they're going to give you for selling a credit spread like this or a covered call, there's a reason. Okay.
Yeah. If there's 5% on a covered call, the first thing I would ask is it a biotech or pharmaceutical company? Is usually the first thing I'd want to know if they're paying 5%.
Mm-hmm.
Yes. All I know is, oh, go ahead, Noah.
Oh, I say now knowing that it's cron and pot stock, hey, go for it. It's a lot more volatility, a lot more risk, and it's certainly the kind of strategy that an experienced trader could probably manage. But if you don't have a ton of experience writing covered calls, definitely not one to start out with.
Yeah.
So on this, I will tell you my bias because I entered cron actually in my wife's IRA. So my wife is retiring on pot right now. When it broke right here. So when it broke and it ran and I had calls on it, I had to severely manage that and roll and roll and roll. Now, I could have taken profit at any of these points, just locked it in, but on this thing, it is definitely a fund management one. So you can get that ROI, but you also may have it blow past your call very rapidly, making it a little bit difficult where you end up with the FOMO.
Yeah. Skill set is higher to be required if you're going to do something like this one because management, volatility, I mean, everything we've talked about, your skills have to be on the top end. And by the way, even when they are, it's still a pain in the butt when you deal with stocks like this. There may be different ways to play it. And if you wanted to do it, of course, it's on the table. There's a reason why it's on the Dirty Sexy Money list, but there's a reason why that list is not the Tackle 25 list as well. There's a lot of choices there. Which one you choose? Well, I mean, you got to run your own numbers. You have to go out there and do and evaluate your own research. One thing I would definitely recommend everybody do is go and take that Tackle 25 course. I think most people who are halftime crew probably have already done that and finished it. Hopefully you got a lot of value out of that. If you did, just type in Tackle 25 in the chat. TackleTrading.com. You can start the course and take it. Obviously, covered calls are a passion of mine. I love them. All of these are qualified candidates. Which one you pick comes down to trader preference.
You know what? I think I'm going to throw that on Twitter. Which one do you pick?
Not a bad poll. Yeah.
Which of these would you rather do cover calls on?
Yeah. All right, guys. That is it for today. Now, by the way, I did see something really interesting. It's National Girl Scout Cookie Weekend. What is your favorite Girl Scout cookie there, Noah?
Thin Mints out of the freezer.
Got to be a Samoa for me.
Oh, thin. Wait, are they still called Samoas? I thought they had changed that name. They're called like Caramel Lights now or something.
I don't know. I saw something where they have pictures of what's his name, MoMA, that handsome looking guy without a shirt on. I think their sales have increased too.
I do like a good Thin Mint though.
I will say I agree with Noah on the Thin Mint. And then here's my little secret of what I do with them. They're out of the freezer, and then it's kind of like I think it's like a French pastry where it's like a chocolate that's similar that they bite the corners off and they would drink either some coffee or tea with it. So I do that with Thin Mints, but with milk. I'll bite a little bit on one side, I'll bite a little bit off one side, and then I'll suck the milk through it like a straw. Perfect.
Maria knows what I'm talking about there with Aqua. I don't remember their names. Yeah, I was wondering how Mark benefits from that. If he's yelling at Girl Scouts, does he actually get cookies before he yells at them, or is he waiting to yell at them after the fact?
The mind of Mark.
Wait till after the fact. Be like, thank you for it.
Thank you for my cookies.
That's an after the bell conversation if I ever heard of one. I will say this. Notation, Berkshire Hathaway, Warren Buffett, annual shareholder letter goes out this weekend on Saturday. I would definitely read that when you see it come across your news wires. I'll give you a little TLDR. He's going to recommend that you buy the SPY low-end cost index funds if you're a passive investor and not pay mutual funds. He's been doing it for 30 or 40 years, Noah.
Yep. I'm excited. I always like that letter. I think it's got some incredibly valuable insight.
I always read it. Yeah, I like it as well. All right. Great job, Noah. Great job, Cody. Thank you, Halftime Crew. If you're here, you enjoyed it, give me a thumbs up and a share. If you're watching this on the replay, say something in the chat. Say, hey, thanks, guys, something like that. I love seeing the comments. So we are out.